Welcome back to the Ignite podcast. Today, we're delighted to have Kirby Winfield on the show. He's the founding general partner of Ascend VC. Kirby, thanks for coming on the show. Would love to get an intro from you for the audience.
Yeah, absolutely. Thanks for having me, Brian. I'm born and raised in Seattle. I always like to start at the beginning.
Yeah,
Born and raised in Seattle. One of the
there's
few.
not many of us.
No, one of the few people left. I was going to say it used to
Yeah,
be only us, and
yeah.
and now people look at me like I'm some sort of artifact when I say that. But yeah, was born and raised here, and then went back east for college. Came back in '96 to help a friend with a startup, which at the time we didn't even know what a startup was, but he created an internet company and wanted me to help him. And so I was the sixth employee and ran marketing for the company. And it was called GoToNet. It was a Web 1.0 portal that really was built around a semantic web search technology called Metacrawler. It was kind of my introduction to AI, which ended up being kind of a through line in my career. We took that company public. It was an incredible outcome.
Wow.
And it was a very forgiving time to be a 26-year-old running marketing for a $4 billion company. And that was the kind of thing that happened all the time back then, apparently. And I think I managed to not screw up, too badly because we got back together and started another company called Marchex in 2003 with the team. Took that public in 2004, did a $200 million secondary shortly thereafter, and bought a portfolio of domain names that I ended up running as a business line owner. We grew that from about 5 million to 50 million in revenue using big data, taxonomies, again, like a little bit of AI. Took that company public. I left in 2008. And I made the mistake, I always say, of thinking I mistook my good fortune for talent and thought, oh, I can probably just take companies public. It seems easy. These guys did it, and I was there. So I took over a venture-backed startup that had raised $18 million. Quickly found out that, I might have been better suited to picking the right founders to work for than to being one. And nonetheless, slogged through this thing, did a hard recap of the business, laid off 2/3 of the staff, pivoted, and really that was my introduction to venture capital. But we ended up selling the company successfully to Comscore. So it was the big data analytics company that we sold to Comscore. I ran corp dev at Comscore for a year and a half, and then
you had the retention kind of earn out kind of thing.
Yeah, no earnout, thank goodness. And the stock actually went on a huge run while we were there. But I launched the product globally that we integrated with Comscore's product, new product line, and went to 100 million in 2 years. Just incredible. Oh, wow. We my technology founder had really built something special, and I kind of rode his coattails through the exit to a great outcome actually post exit, but was ready to move on, and so jumped back in, did one more startup. Again, two smart technical co-founders with a great product who needed a business guy, and I jumped in and did a company called Dwellable, which we raised a couple $1 million for as a travel app. Mavron here locally, and Boris at version 1 up in BC funded it. And we built the team, monetized it, had hundreds of thousands of users. Couldn't get the Series A, sold it to HomeAway a year later. Great outcome for investors, pretty good outcome for the team. And
nice little kind of pop there, early stage, 5 million cap kind of thing, 10 million cap, and sold it for how much?
Yeah, exactly. It was we sold it for 20 million.
Nice little quick 2 or 3xer. Yeah.
And again, all credit to the technical team who founded it and created the solution, and hired up a amazing group of folks who then just really fit into a gap that HomeAway had on their mobile team. And big kudos to that entire group for moving to Texas to get the deal done. So that this time I was smart enough to realize I wasn't going to add much value post deal. And so I left right after we closed. I kind of looked at my career and just like, gosh, 4 startups, 4 outcomes. The last 2 were the ones that I ran, and I had to work really hard to just get, decent returns.
Yeah.
And the first two, I picked these really smart founders to work with and had huge, huge returns. So I thought, man, maybe I should go back to like picking really smart founders because I'm not sure I'm built for this. I was beat down. I had a young family and I'd never been there for them. I was always running startups. And,
Yeah.
I was 50 pounds overweight. I was drinking too much, traveling too much,
Yep.
not exercising. So I kind of did this whole life reset. And I was really fortunate to have, a very patient wife and kind of got back to, focusing on, what was important for a little bit. And
it's really the people we marry that make the biggest difference.
Oh, no. I mean,
just such a big difference.
No question.
Yeah.
And, I'm still 23 years in. I'm grateful every day because I don't think I would have made it without her. She and I kind of got to reconnect, and I got healthy and got my priorities straight, and was like, gosh, I'm not done. I'm not much of a golfer. Like what can I be doing?
Yeah.
What do I like doing?
Right.
Like, dude, I don't know. I had never asked myself that question in my life. Like, just
really?
Yeah, no.
You just kind of did the next thing and did the next thing.
I always did what I thought I was supposed to do, whether it was what my parents thought I was supposed to do. Like, I wanted to be a DJ. Like, that's what I wanted to do.
Well, Run DMC poster, right?
There you go. We've got Wild Style up here.
Nice.
Going here, and like you can't see all the other stuff. But yeah, I mean,
that's so cool.
I wanted to be a DJ, but that was like, there was just no way that was a viable path in, especially my dad's eyes. And I thought it would be disrespectful to him to like pursue a career in music or a career in, even music advertising. Like I could have gone and worked for a label out of college in New York. Like I could have done all these things, but I kind of said, I'm going to do advertising. I'm going to do, cause that's what's expected. And I think I might like it. And then you just wake up 20 years later and you've just done the thing that was the next big thing. And I thought I should run startups because that's what you do. If you have success with your first couple of shots as an employee, you do it yourself. And then like you do the next one. And so I just never paused to ask what I liked doing, or what I thought I was
How
actually.
How old were you when you finally said, that question to yourself?
I was 42.
Wow. 42.
Yeah. Which just wasn't like something that I think
that's the magical number, right? That's the answer to life.
That's right.
42.
42. Jackie Robinson. I don't know. I feel like people come to those realizations earlier these days because there's just a much healthier.
I was 26.
Yeah,
I was 26. I worked really hard. Grew up poor. I'm from Seattle as well. Shoreline, UW, undergrad, all that stuff.
Yeah.
Shorecrest, Kellogg Middle School, that whole area.
Represent.
And
I went to Syrie growing up.
Where is it?
I went to a school called Syrie. I grew up unincorporated King County.
Oh, okay.
Which is now Richmond Beach.
Okay.
And so,
I know where that is. Yeah.
Well, I was 8 years old, and then we moved to the city. But anyway.
I was on the other side of the lake, basically.
Yep.
Shoreline, northwestern side of Lake Washington. But, I worked really hard, got the finance degree, got to Wall Street, CFA. Same experience. Like, I became disillusioned, actually. I was like, I hate this, actually. I don't want to do this. And so I kept asking myself, if I had 10 or 20 million in the bank, what would I do? I didn't have to work, right? Like if I, that was like where you were at 42, where you're like, kind of like, well, I could just sit here and play golf, but really, what do I want to do?
You had the foresight to run the thought experiment when, before you got there, which is smart. And I had the sort of the blessing and the curse of having such amazing good fortune right out of school that you could be tricked into thinking like, it doesn't really matter.
Trapped by your own success, kind of.
Yeah. You're kind of like, well, why would I ask a question like that? It's clearly working.
Yeah. Everything's up and to the right with my career and my life. Right. And yeah.
So why am I going to, becomes harder to switch. Anyway, so I was fortunate to have this time to kind of press pause and figured out like what I like doing and what I think I might be good at is working with founders and, talking to them about their journeys and trying to be helpful. And like, I've just, by virtue of sort of circumstance, had almost every good and bad experience that you can have as a founder. I thought that might be useful. And look, I love, somebody asked me earlier today, like, what's your favorite thing about your job? And it's meeting with founders. And that, Like, I feel like
Absolutely.
it has to be if you're a VC. Like, I don't know what you're doing if
Yeah.
it's
If
not.
you don't look forward to meeting with the founder, you should probably get out of the business.
Yeah, and just the fact that what I started to realize was I would meet with all these founders, and as an angel,
Yep.
it was very catch as catch can. But like even founders where I was like I hated the business, and maybe I didn't even really think they were that awesome or well fit to the problem. I always learned something I didn't know.
Yeah. 100%.
Like I learned something about I learned something about software infrastructure. I learned something about foreign markets, or I learned something,
Yep.
and I thought, well, this is cool because like even when I'm losing, I win. Like, and it was just really, kind of eye opening, and I seemed to get good response from those folks. I always felt like I could impart like one thing that might be useful,
Right.
and started angel investing with kind of an eye towards figuring out if there was space for me in the ecosystem, if there was like if I offered a product to the founders that was not currently on the shelf. And in Seattle, as you know, like it's a really amazingly supportive and connected venture community, but it's very small and there aren't many options. And my thing was like, look, there's vanilla, there's chocolate, there's strawberry. Like I'm just over here trying to provide like, Rocky Road. Like it's something a little different that maybe isn't for everyone, but the people who it's for it maybe really like it. And people like the ice cream.
How long were you angel investing before you actually, raised your first fund?
So I was angel investing full time from 16 to 19. Raised Fund One, first close in July of 2019. Along the way, got to help launch as an advisor only. Didn't do any real work, but helped launch the incubator program at the Allen Institute for Artificial Intelligence.
Oh, we just invested in one of those companies, HAL9. Do you know those guys?
Oh, Javier.
Yeah, Javier. Yeah,
love that.
He's on the podcast. I love that guy.
Yeah, he's the man.
Yeah.
Oh, that's great. What a great investment.
Yeah.
So, and I still hang out at AI2 quite a bit, trying to be useful where I can be to the teams. But that was a neat opportunity to kind of come in and sit with those folks as they were spinning things up and give them kind of a investor lens on things. And they let me hang out long enough and base my investing out of there long enough to where I built a little track record and had some investments go well. At the same time, I had a bunch of people I'd made money for in my 4 previous startups who were like, dude, I'll
throw some money at you. Yeah.
Well, first they were like, dude, just stop showing me all your angel investments. I don't have time to think about these things.
Yeah.
They're basically like, hey, just do a fund.
Just do a fund. Yeah. I don't have time for this because I think people from outside looking in don't realize how much work this is. It's not as hard as starting a company and running a company, being a founder, but running a venture firm is actually a lot of work.
It's different. It's different.
It's a different kind of work. Yeah.
Different kind of work. I mean, you have like, I would say like, you're never the single point of failure for anyone. Whereas when you're running a company, you are the single point of failure for every employee and every investor.
Yeah.
Less so the investors because they have portfolio theory at play. Whereas when you're running a fund, if I get hit by a bus tomorrow, like founders will be bummed, but they'll keep building their company.
Yeah, they'll be fine. Yeah. I guess that depends on do you take board seats? Like how concentrated are you? What is your portfolio theory for your firm? Yeah.
Yeah. So launched in 19 and we're on fund 2. We've made more than 80 investments. We invest in, AI, ML and data, B2B software, sort of, we think of it as just SaaS 3.0 really. The AI isn't what matters. It's what it allows you to do, solve problems for the enterprise. And so that's the thesis. And we're pretty prolific. So my feeling is that because we're generally focused on the Seattle region.
Yeah.
We don't want to be hyper concentrated. Because Seattle is, certainly on the rise. The thesis behind the fund is that, over the last 5 years, there've been, $60 billion in outcome in this ecosystem, where the previous 10 years there maybe was a quarter of that. And so we are starting to look a lot more like New York did in in the
Yeah, it's kind of a flywheel spinning there, you know, with
right,
all of the startups and Amazon, Microsoft, and
yeah, you get the off ramps. Now you've got growth talent. You've got 30 unicorns. You've got people who've done it. We never had that before. You just had all these technologists trying to figure out how to get from A to D, and now you got people who've done it. So we do think there's a lot of density of outcome on the horizon.
Yeah.
But it's not the Bay Area, and that's okay. It shouldn't be that. What it should
I
be.
think a big part of our thesis too is like there are unicorns everywhere, right? There's 10,000 seed fundings a year, roughly 100 over the long term become unicorns, and it's about 1 or 2% depending on who you ask, and so I think I'd love to get your thoughts on this, but I feel like going forward, maybe there's a diaspora of unicorn creation happening outside of Silicon Valley. And I think you're describing what's happening in Seattle as kind of a...
I absolutely that's the case. My only point with regards to portfolio construction was that, and you need more coverage if there are fewer per capita unicorns, and so that's why we.
Let's unpack that. What does that mean? More coverage.
So if I'm in the Bay Area, and let's assume I'm in the top quintile of investors with regards to access and deal flow and picking, I might be able to run a pretty concentrated strategy.
Yeah, I know which 20 I want to invest in
because
this fund.
The odds are the graduation rates are way higher. The odds are way higher that you're going to see those things mark and eventually have good outcomes. That's just the numbers. I'm a Seattle booster, and I believe that Seattle is an incredible place to find alpha, especially if you're an LP and you're not able to get into the top quintile funds in the Bay, which 99% of LPs can't.
Right. Right.
But the point is, if you're in Seattle, if the frequency of outcome is slightly lower, you just want to correct for that by having more swings.
Yeah, I love that. So I love to dig into that. I like this thesis, this portfolio construction theory, which is, let's assume there's a frequency of unicorns. It's below the average. Let's also assume that I'm not as good as I think I am, right? Like I'm maybe not the top 20% VC. I'm maybe average, or maybe I'm below average. The rational investor in this case wants to increase their volume of swings to maximize their chances of hitting an outlier. Is that kind of how you're phrasing it?
Yeah.
I love that.
Yeah. I mean, hopefully I am top quintile, but only time will tell. And meanwhile, there's plenty of research to show you that in any geography, the sort of the ideal portfolio at pre-seed is about 50 companies.
Yeah. And I've actually looked at some research, and I used to run Monte Carlos on loan portfolios on, back at Wall Street. If you run millions of simulations with statistical, probabilities distributions, in pre-seed and seed, you can make a case that you should have even 100 or 150 or more.
Yeah. And that's what the research.
Right. So, the rational, and there is a diminishing return, I think, probably past 100, 150. But, you think there's 10,000 seed investments every year. There's got to be at least 500 that are probably pretty good, worldwide. Right. And in Seattle, there's some fraction of that.
That's right. Yeah. And again, I think you can run the shall we say, smaller check, more coverage model in a market like Seattle, which I think is top 5 in the country, but is not number 1.
Yeah.
Because there's less surface area.
Yeah.
So you can approximate. You're certainly not indexing the market, but you can approximate some meaningful percentage coverage, which again you would have to be YC to do it in the Valley.
Yeah. Do you often pinch yourself and think of how awesome it is to be a VC, like how you stumbled upon this career? Or do you just love every day of it?
All the time. I'm like, how did I? A lot of times I just go, how did I survive? My startup operating career. I mean, I barely did, to be totally honest. But I'm just so grateful to be doing something that I always tell people I'm working at the intersection of stuff I like and stuff I'm good at. And if it doesn't fall into those two buckets. It either gets outsourced or it doesn't get done. And that's just not a luxury that you have as a founder. As a founder, you often have to lean very heavily into the stuff that you don't like. But fortunately,
as a VC, you can kind of hire people or contractors or whoever to outsource things you don't like to do.
Yeah, if I didn't have a chief of staff or a outsourced back office firm and a fractional CFO, like I probably wouldn't do this job because I'm preternaturally allergic to administrivia and finance. So yeah, you just kind of pick. You try to put yourself in whatever your zone of goodness is.
I think that's generally good advice too. Is if you find yourself doing something that you don't like doing, and you can outsource it and you can delegate it or hire somebody to do it, you should. I had somebody on the podcast who was a unicorn founder, and I asked a question like, "What's the best business advice you ever received?" And I think he said along the lines of, "Hire people to do the things you don't want to do as soon as possible,
or the things that are low leverage." I mean, we've had founders like reconciling books on a monthly basis, doing accounts receivable through like the seed, post seed, and I remember a founder once told me, I said, "Well, hey, what did we do last month in revenue, and he says, "Well, I can give you some broad strokes, but I'm still closing the books." Wait, you are closing the books?
Yeah,
there's something.
You just raised $2 million. Like, what are you doing? Yeah,
but there is, there's a certain founder. I was definitely this way where you just
let go.
You want to outwork everyone.
Yeah,
and sometimes that's just not the smartest way to pursue or prosecute your startup.
So did you return to your childhood dream of becoming a DJ?
Over time, it's funny. I finally bought turntables in like 1997 and a mixer and started collecting vinyl. We started buying vinyl. And so, yeah, I have, I've gotten to play. I've played weddings. Like I've
really? Wow.
played a bunch of parties, and I still threaten to like go try to do a residency somewhere. I have enough friends where I could probably bring enough business where someone would let me set up and play records once a month. But maybe that may be one or two funds away. We'll see.
That's so much fun. Yeah, for me, it's I'd love to be able to like create hip hop beats and stuff like that. Growing up, listening to I See the Run DMC poster and just growing up with hip hop in the 80s and 90s, like the classic era of hip hop, and just be able to create some beats from that era, like in the DJ Premier fashion, or Dr. Dre fashion, any of those. Like,
well, you can do it now, right? I mean, you get Ableton and all these DAWs and like, if you're more technically inclined than I am. My problem is I still play vinyl. I didn't get Serato. Like I'm a Luddite when it comes to music, sadly.
You know what I realize about myself? It's interesting. It's like, what do I like to create? What comes naturally? Talking to you on this podcast is just natural for me. It is a process of creation, and I get to learn about you and learn new things, and I like it. That's why I do the podcast. But I've sat down with Fruity Loops and Ableton, and I just can't get through the barrier of creation. I don't enjoy the beat making process. I've created some beats; they sound okay, but I'm not having fun. Just like writing songs on guitar. I can play. I like to strum. I can sing a little bit, but I don't like the struggle of the creation of it.
That's a perfect definition of a venture capitalist.
Yeah. Yeah, exactly. I enjoy the creation. I enjoy talking about it, learning about it, but my mind wants to go to the next thing. And that's what makes me a good VC, I think, because I can surf chaos, go from company to company and just constant context switching and learning new things. But I don't like to dive deep on anything.
You're an executive producer.
Yeah, I'm executive producer. Kind of come in, seagull shit all over everything, and then fly out of there.
I mean, look, maybe you're bringing some record. You bring the sample, maybe you bring a record or two, and
I'm like, I like this sound. Check this out.
Something like this. Yeah, okay. It is funny. I'm the same way. I wish. I don't know. Maybe that's not the right word, but I spent so much time. It's embarrassing how much time I spent playing video games growing up.
I still do.
College. and
Oh,
I don't, but when I had the time to put in my 10,000 hours making beats or DJing or right.
yeah.
I didn't spend that time doing that. I spent
Yeah,
that
you
time
give me
playing
Mike
games.
Tyson's Punch Out. You
Yeah,
give it to me to
yeah,
this day. I can go all the way to Tyson without practically getting hit. And I learned to play that game almost 30 years ago. Like, and I can like just go in and just. My kids are like, "Whoa, Dad!" They can barely get past like the first, the minors with Piston Honda and stuff, and I'm like all the way to Mike Tyson.
that's really funny. Yeah, I mean,
All the muscle memory is still there.
it's incredible what our brains are full of.
Capable of, yeah.
Yeah, I always wonder what like I think I know the complete lyrics to like 10,000 hip hop songs, and I'm like, what is that space that's taken up by that? Like, what could that be used for?
Does your wife hate you when you respond with rap lyrics? Because my
Oh,
my wife hates that.
you know, she's used to
I'll just take
it
I'll just take something like a little phrase or a little
by now.
a little word, and I'll just like return a rap lyric
Yeah,
from 30 years ago.
that's it's. My wife used to listen to rap, but she's one of those that like there were a bunch of people that used to. When
Mm.
they stopped in like, and maybe you're one. There's no grudge, but they stopped in like '94, and then my problem is I kept going. So now, thank God for Twitter, or I wouldn't know anyone who cares.
What are your top 3 rap groups, hip hop groups all time?
All time.
Yeah,
I mean,
top 5, top
yeah, I don't
10.
know. Probably Gangstar,
Mm.
um,
DJ Premier, yeah.
Tribe Called Quest,
Tribe's number 1
um,
for me. Yeah.
probably P Rock and CL Smooth.
Hmm.
Um, anyone like Big Daddy Kane, BDP.
Yeah, so the early 90s, late 80s stuff.
Yeah, I mean,
Yeah, yeah.
Black Moon, Beatnuts. Like I
Hmm.
get Second Golden Era, I really get with too, and then I think that it became kind of a wasteland after '97, and I
Yeah, I think Black on Both Sides, Most Def was probably one of the last great hip hop albums. That
yeah.
came out around 2000. Black Star, you know.
I felt that way, and then I kind of re-engaged with the music in like 2012 or so,
Hmm.
and so sort of the OK Player era, like the blog era, and the
Got
ASAP.
into Joey Badass. Have you heard his
Yeah,
stuff?
yep, Joey Badass and ASAP
Yeah.
Mob, and like, and then Fashawn, and now I'm big into Your Old Droog and Makhami and the God Fahim, and like
Okay. Yeah.
Cookin' Soul is the most amazing producer I've heard since Pete Rock. Like,
Okay.
so there's still a bunch
It's
of
still
great
out
stuff.
there. Yeah,
Yeah,
it hasn't
there's
died. It's just
not at all.
morphed. Yeah.
Yeah, and you just have to look for it or be around it, which is easier than ever now because of the internet. When I was growing up, like to be around it, you had to be around it.
Yeah.
And so it's good. It's one of my excuses for being on Twitter still.
I love it. So you'll love this. So I get on with my old friends. We all known each other since elementary school or earlier in some cases. We'll play like Rocket League together, and we'll just play rap in the
Oh, that's
background.
great.
And so that's like me being a kid in my 40s, like just returning to my 9-year-old self.
Well, good for you for doing that.
Yeah, it's so much fun. Let's unpack. I'd love to unpack the overweight Kirby drinking too much, because I just
Yeah.
came out of this period myself during COVID where I gained a bunch of weight and I was drinking every day, and I'm like, what am I doing?
Yeah.
Like, what was that kind of period like for you, and when was it like, oh, I got to make a change here?
I mean, I think I was in the businesses I was running, the 2 startups I ran. Well, certainly, let's go back. Pretty much every startup I was involved in, I was doing a lot of outbound. So I was out representing the company, traveling, doing deals, doing sales. I was in digital media, which is kind of notoriously a hard driving,
Hard party, and yeah, I worked at Rocket Fuel back in the day, ad tech
Oh
unicorn.
yeah, so
Yep.
you know it. So
Oh,
like,
I know it. Yeah.
and I go to London a lot, go to New York all the time. We go to Monte Carlo and like all these crazy boondoggles, and you just kind of get that just becomes your lifestyle. And
Yep.
then you get home and work till 8 o'clock at night, and then it'd be too late to go home for dinner, so I just go to the restaurant, drink wine and hang
Yep.
out, and you just kind of get in this like all you're doing is going to work and then going out.
Yeah.
And then had kids, and so fine, like then you're going to work and going home, but when I have a nice glass of wine after a hard day and
Right.
you open the bottle, and so I think you just kind of get, you kind of gets away from you a little bit. It got away from me.
Yep.
To where I just didn't feel great about, I didn't feel great about just who I saw in the mirror.
Yeah.
And I
kind of, yeah, I got to that point too, where, having way too much, maybe even a bottle of wine every night. And it's like looking at myself, I'm like, I look old and I look puffy and I just look tired.
Yeah.
And I look fat,
and life's hard enough. If you start,
life's hard enough. Yeah.
If you wake up with sort of 2 strikes against you, like, boy, you're spending the whole day trying to fight back. Like, that's not a great way to be present. As a leader, as a person. And I think so after the 3rd startup, I got smarter about, sort of alcohol consumption and, being mindful. But I replaced it with ice cream.
Oh no.
So the good news is I was pretty clear-headed the majority of the time I was running Dwellable. Not to say that I wasn't, when I was running the other companies, but just, I think I was in a better place with how I was managing my day to day. But I might probably gain, another 10 pounds because I was like, well, hey, I deserve this.
Yeah, I probably gained 50 pounds. I'm down about 25 now, but I gained definitely 30 or 40 right in COVID. Just shot way up.
Well, you look good, man. Congrats on managing it down.
I'm actually 63 years old. No, I'm just joking.
Yeah. Do you have a blood boy, right? You're.
I'm 43. I'll be 44 in June. But yeah, green tea every day. Lots of sleep. Get my exercise.
Sleep, man. I wish someone had told me sleep and exercise. I didn't exercise for like the day I stopped playing football in college until like 2016. I basically did no exercise. And
you played football in college?
I did Division III. So
but still,
playing is putting it pretty loosely. I was
on the field. I was geared up.
I was wearing a uniform. I got, it's good times. Some of the best times, best friends, still have the text with the guys. And so it was a blast. But yeah, I just kind of, my thing was I always worked out so I could play football. And so once that went away, that motivation went away, I was like, oh, well, why would I work out? And then in 16, I kind of go, oh, because I got to lose weight and started running. And now, of course, I got addicted to that because everything's binary in my life. And so
I'm the same way.
Yeah.
The same way. I'm 100% in or 100% out.
Yeah.
It's like all or nothing.
It's hard. It's a blessing and a curse. I think, and of course, because I got into running, then I started running like 12 miles a day sometimes. And I had friends and I was running fast and my friends were like, what are you doing? Are you training for something? And I was like, no, I just really like running. And they're like, you're going to hurt yourself. And I did. Yeah. And then I got depressed and I gained weight. And so it's this whole kind of,
finding the balance,
that's
really tough.
It's tough. I think putting family, I don't know if you found this, but for me, like when I kind of reset and put my family first, it was really interesting. Like this idea of putting my family first and then work, would fill in as it came.
Yeah.
And as opposed to
what do they need? How can I put them first in every situation and then work backwards from that?
I'm just broadly having that as a framework versus like, I was always like, well, my job is the most important thing and nobody cares about me if I don't have a job that's important. So job first. And then if there's leftovers, it's for you guys. But switching that, what's happened is I had all the time in the world for family for, a couple of years. So I was angel investing and then I did the funds and slowly, there's less time for family.
Yeah.
But family's still at the top. It's still the priority. And so even if there's only an hour for family, that hour is super valuable. And I make sure that it's the time that works for everybody. And like, somehow it still feels like more time because it's still the priority. Like if something has to give, it's always going to be work.
Yeah.
Almost always. Sometimes it has to be work, but like 9 times out of 10, it's the work can be managed into a space or time that's that doesn't.
What I've learned as a working Team Ignite now full time is I kind of work a swing shift. I kind of work those 3 or 4 hours in the morning, 3 or 4 hours in the afternoon, maybe an hour or two in the evening, and then I'll throw in the extra 3 or 4 hours once or twice on the weekend, and it kind of just I really like that flexibility of being able to kind of work when it makes sense, rather than having to go like into the office butts and seat, for 10 hours a day or whatever it is.
Oh yeah. I mean, it's the only reason I can work as much as I do and as hard as I do is because I can do it in that fashion. Like I get up at 5:30. This morning I was up at 4:30 for some reason.
Oof, that's
And
so early.
I'll just work. You'll get there. But I'll just work till work till 8, and then I'll bring my daughter to school, and then I'll go for my daily run, and I don't schedule meetings till 11, and then I do meetings from 11 to 5, sometimes 11 to 4, 11 to 3, but whatever it is. And my thing is I love the weekends. There's certain type of work I do on the weekends, and the weekends nobody needs anything from me, and I can run later in the day. So weekends I work from call it 5 to 10, 5 to 11, and it's because it's what I want to be doing with my time. And the weekend treat is that there's like no meetings, so I really get to work. And
I do the little blocks. I block off. Okay, I'm gonna take a walk here in the middle of the day because I know I need to my energy level is gonna be low, so I'm gonna go for a 20-minute walk at that hour, that half hour. I block off an hour for lunch, and I work out. I have the tonal. Have you heard of this exercise machine?
Course. Yeah, my buddy Rob Coneybear at Shasta, they did the Series A, I think.
Amazing machine. I cannot say enough about it. My wife got it for me for my birthday, I guess almost 2 years ago now. And life-changing. Just being able to go up there and just bang out a 15-20 minute weight training, just change your life. So I work out every single day, usually at lunch, do the protein shake, and then meditation, right? Meditating twice a day.
Good for you.
Yeah, trying to get that.
That's
regular.
Good for you. I'm too noisy. I know that you're not supposed to strive for nothingness, but I just haven't. Meditation and yoga are two things that I intellectually know would make my life better that I still don't do.
I never regret doing yoga, but I'm always resistant to doing it for some reason.
Yeah.
I'm always like, I could go work out. I can go for a run or a walk or blah, blah, blah. And then I do I'm like, oh, no, I said I'd do yoga once a week. I'm going to go do it. And at the end, I'm like, gosh, I really like this.
Really? Yeah. I mean, I have people who I respect a lot who rave about it, but I'm addicted to running. It's such a time-bounded, so I'll run 6 miles in 50 minutes or whatever, and it's perfect. It just fits.
Yep.
And what I get from it is so reliable and consistent.
You got to try weight training. Are you doing weight training?
No, I went and saw a trainer, and I know I should be doing weight training. I should be doing body weight. I am very much. I have a very hard time doing new things, and once I do them, that's all I do. And so it's the 30-day thing.
Yeah.
If I could do the weight training for 30 days, I would do it every day for the rest of my life.
What I learned was, after 40, you lose about 1% of your muscle mass per year. And so you have to work out just to maintain your muscle mass. And it's also correlated to longevity, right?
I know.
The muscle mass. I know. So you won't fall and break your hip, because you have all the muscle.
No, and really when you turn 50 is when it really gets bad. So you're supposed to, it's I would say so a lot of times, I don't know how you work, but a lot of times I'm working on something without working on it. And so it feels like procrastination, but it's just not timed. It's not baked yet, whatever the thing is.
Yeah.
And so I've now, I did the step, in December of engaging with a trainer. So I feel like I'm working on it. I took a step towards towards integrating new workout routines or towards lifting weights, whatever it might be. So I trust myself. I've learned to trust myself, which may be a mistake in this case, but I trust myself that when it's time, I'll do the thing.
Yeah.
It certainly works really well for work. Maybe less so for home stuff. Is my wife's like, why didn't you respond to that email? I'm like, well, it's not, because it's not time yet.
Not time yet. It's there. I will respond.
Yeah. Don't worry. I don't know. So maybe it's just an elaborate way of explaining my laziness, but.
So to describe for me your perfect startup, and it could be one that you invested in, or just a theoretical perfect snowflake of a startup that comes across you, and you're just like, this is an easy yes. It checks all the boxes.
Yeah, sure. We announced today that a seed round.
And it doesn't have to be real. You don't have to say names if you don't want to. Yeah.
No, but actually, there's actually a really good example that is top of mind right now because they got their seed done today. We did the pre-seed, and then Bessemer and Walden Catalyst led the seed. It's a deepfake detection startup
I
called
heard about this one.
Clarity.
Yeah.
I met the founder, 2017 or 18. Really charismatic guy. Didn't think about him again for 4 or 5 years. And then a friend of mine was working with him and said, "Hey, you should really talk to Michael." He has background in startups and specifically a little bit on the venture side. He's wicked smart. He's the kind of person where after you meet him and you get off the phone with him, you just think to yourself, how can I be involved with this person? Right? How can I
should I sell my venture firm and go work for this person?
Right. And combining that with a market that's a complete, just wide open blue ocean that is going to absolutely explode in the next 5 years, with no clear winner. And a couple of
it's almost like cybersecurity, right? It's like looking at CrowdStrike probably 10 years ago.
Yeah,
there's going to need somebody. There's going to be a winner here.
That's right.
In this area,
and maybe multiple winners. Like it is a massive, massive, massive problem space. So we invested, a year ago, and as you've probably noticed, like deepfakes have become like a huge issue.
I guess there's fake Trumps calling around people right now.
Fake Bidens, fake Trumps. There's now a problem that Clarity is working on around executive deepfake protection. There if you saw in Hong Kong, but basically hackers made their way into a Zoom and deepfaked 4 executives from a company. The 5th person was a real employee of the company, thought the other 4 executives had approved and directed them to wire $25 million out the door. They did it. They did it. And
And so the money's gone. It's just gone.
Money's gone. And so, And so that can happen to real companies, right? And
that's insane
at any level. And so a lot of the conversation now is with, for this company that we've invested in is with, CISOs of banks. And financial institutions. And so
now you have to run this deepfake software on top of all communication, basically.
Right. At all times.
You just never know at all times.
So it's got that intersection of an incredibly dynamic and charismatic founder who can raise money, a problem space that is nascent, but we bet that it would explode, and hopefully that's true, and then a technical team that's A++ in a solution that's unique and defensible, which we think they have. They're all out of 8,200 and cyber warriors in Israel, and so that's kind of like
founder market fit was off the charts. Amazing founder that you see ring on the NASDAQ bell someday, being the leader of the space, kind of checking all those boxes for you.
That's one where ask me in 7 years, but that at least has the profile of something where you're like, when it all kind of feels like it's going to be that, that's great. But as
so much of this early stage stuff, it is a feel, right? It's
totally because a lot of times they don't look like that until they look like that. And so
I have plenty of those,
right? Well, and the question, but Court at DocuSign will tell you like DocuSign didn't look like that for the first 5 years. Those guys didn't look like that, and that company didn't look like that, and everyone thought they were crazy. And so especially in this market, a lot of times we don't have that flashy founder. You don't have that person that presents as like a magical fundraiser, and so you got to try to unpack like, are they close to being that? And are they so good at smelling the problem and like chasing it down? Is the market big enough that you're willing to underwrite a little bit of a stretch on one of those axes? Because we don't have the same density of like, sizzle selling slickness that the Bay Area does. And I think that's actually a strength up here. But it does kind of change how you have to evaluate deals, especially at the earliest stage. it's
What?
not always as easy as it was with Clarity to identify. Okay, yeah, this is, you know, there aren't as many easy checks as you would like, I think.
Yeah, yeah. So you do a lot of AI investing. Like, what are you excited about? I mean, this deepfake thing is a great example, but what are some other trends and interesting things you think are happening in the
Yeah, I
present
mean,
and
I
future?
think probably the infrastructure layer has been overinvested. I think you're seeing, that's, and I think I felt that way for a little while now.
A lot of money chasing the third place, fourth place infrastructure
Yeah,
layer startups. Yeah.
yeah, and I think a lot of AI for AI is too early. And because you're either a really good practitioner and you'll build your own LLM evaluator, or you're a really big enterprise and you're not really spending money on AI.
Yeah.
And so we've just been focused on like vertical SaaS 3.0 is what we're calling it, but basically just AI native SaaS.
Yeah.
We just invested in Patrick Thompson's company, who was a founder who we had in Fund One, who exited, and he's now building. I will say, just building something new. And but the idea is to basically disrupt a particular set of kind of marketing, sales, CRM automations by doing an AI native version of that. And when we think about AI native, we think about it both in terms of the integration of AI into the solution that is customer facing, but also the integration of AI into the fabric of the company itself.
Yeah. There's just going to be a lot of incumbent SaaS that's disrupted, I think, in this next wave because AI is creating a new way of creation of SaaS, right? And so it's, software's eating the world. Now AI is eating software. And I'm seeing a lot of startups, I'm sure you are too, where they're like, oh yeah, we're going to go after this, 10-year-old SaaS platform that cannot, just can't do it in a modern way because they're just stuck in the way that it was 10 or 15 years ago.
Yeah. We had this conversation with the founder in the portfolio earlier today, and they're like, they have found their way into a really interesting place where there are three incumbents in the space that they're in, which let's call it like it's an iPaaS kind of solution. Yeah. And they're all, 10, 15, 20 years old. And it's just like,
that was super modern, back when cloud came out in the late 2000s, right. And the multi-tenant SaaS and, Salesforce.com and blah, blah, blah. And now they're starting to be stodgy, clunky, old tech stacks. And there's just new ways of creating that software and new ways of doing the business. Like I'm looking at an API company where there's all these API companies out there that are all built on like 5, 10, 15-year-old technology that help you connect apps. Well, they're using AI to automatically do that for you. So it just unlocks a whole different way of integrating APIs. You can just have AI do it, and it just does it on the fly and adapts exactly to what you need when you need it, rather than trying to like make you like kind of look at all the JSON and match everything up and get all the edge cases. And
send me the company.
Yeah, it's a good one. We need to do more of that. I'll send you more deal flow and
yes,
and vice versa.
For sure.
But I could talk to you for another hour. I know we're at time. Thank you so much for coming on, Kirby. We'll definitely have you back on the pod at some point in the future. Thanks so much for coming on.
Yeah, Brian. Yeah, this was awesome. Super enjoyed it, and stoked to see you around town and do some deals together.
Let's do it. Thanks so much.
Thank you.